Hi, and welcome to another episode of Creative Outcomes. I'm Ryan Watson. I'm one of the partners here at Upsourced. Today, we want to talk about the topic life cycle of agencies. What do I mean by life cycle of agencies? Well, let me tell you. So, it came as an epiphany for us as I'm reading, I don't know, the 12th, 13th, whatever the number of blog posts is. And I'm sure you've read something like this. It goes, what are the 10 KPIs I should focus on for my agency? What are the 10 KPIs that should be on my dashboard? Every time I read one of these articles, I think to myself, yeah, that's 10 KPIs. You absolutely could measure those things. You could look at all 10 of them. But the reality is, and I think we've learned over a decade of working with agency owners, is at any given stage, there's probably just one thing, maybe two, but probably just one thing that really matters for you based on where you are in your agency. And that thing is dependent on where you are in your life cycle. Where are you on the maturity curve? And it's because of that realization that has caused us to create this framework, a way of thinking about and cataloging agencies based on the kind of common problems and solutions at that stage. And so we have created this life cycle of agencies, and it's what informs how we work with our clients. So let me tell you what those life cycle stages are, and then let me break down the first stage for you. So, first, what are these stages? There's four of them. The first stage is create mode. Create mode is, let's say, $0 to $1 million in annual revenue. And it is what it sounds like. This is the point where you're getting your agency off the ground, and everything is about how do we create a real business that should exist in the world, right? And then at 1 million, it's kind of your first inflection point, and that gets you to the next stage, which is what we call build mode. So build mode is from 1 million to, let's say, 3 or 4 million in revenue. And here the whole, you've created something. It should exist. It's again, it's a going concern, but it probably got here on running on fumes with, cobbled together with shoestring and bubble gum. And the whole exercise here is about bringing in some outside help and getting yourself to this profitable, sustainable place where you don't really own a job, you own a business. And then you'll hit this next inflection point about 3 to 4 million, and that takes you to what we call grow mode. And so grow mode is from 3 to 4 million in revenue to, let's say, 8 to 10 million in revenue. And this is really where you've created something, and individually it's sustainable and it works. But at 3 to 4 million, things start to break and fall apart, and morale tanks, and you lose some clients, and you realize that what you've created works, and you can kind of like bear hug and stranglehold, and you can be involved in all the decisions until you get to this level. And now you as the owner or partners are now several layers removed from a lot of the decisions being made and the service being delivered. And in order to succeed, you need to promote and provide visibility and accountability and incentives to the next deputy of leaders to help carry out the decisions you want in your stead. And so that exercise is really what is the hallmark of making your way through grow mode. And then the final stage is what we call scale mode, and that's it happens somewhere between 8 to 10 million in revenue. And this is really the stage where you're a big business, and you have made the conscious decision that you want to be a really big business, and you're going to make some very conscious decisions that would help you get there. So those are the life cycle stages. And as I mentioned, the kinds of things that you deal with as an agency, the kinds of things you should be focused on are very dependent on where you find yourself. So today, why don't we talk about the first one, which is create mode, right? Again, create mode, 0 to 1 million in revenue. Your job is to get this thing off the ground. And look, my attitude regarding what you should focus on from a financial perspective during create mode, honestly, it might sound a little bit counterintuitive coming from, I'm a CPA. I run a firm. We're incentivized to provide accounting and finance services. But what I will tell you is in create mode, you should be predominantly focused on sales and service. What am I delivering? Who am I delivering it for? How do I find customers who are going to pay me to deliver that service? That's your whole focus. The reality is there are very few problems that I cannot help you fix once you've hit that first inflection point at $1 million in revenue. The one thing I can't help you fix is the fact that you never got there, that you ran out of money before you made it to $1 million in revenue. And so again, very few, I see a lot of folks who get really, they spend a lot of time on building like complicated business plans and 3-year financial forecasts and things like that. And I would call a lot of that playing business. Your focus here is getting the thing up off the ground. And from a finance and accounting perspective, you're really trying to avoid the kinds of mistakes that are going to cost you a lot of time, headache, money, risk sometime in the future. And I would say that the majority of those things lie in, one of three buckets: legal, payroll, and compliance or taxes, right? So from a legal standpoint, in create mode, if you're starting this business with friends or partners, or you're bringing in outside people and you use the term equity, you got to avoid any kind of napkin or handshake deals. Like, these things need to be written on proper operating agreements, and you got to bring in a lawyer. If you're paying people for service, whether they're contractors or employees, you got to make sure you're classifying them the right way and you're paying them the right way. And if you're paying them on payroll, you got to make sure you're doing the right withholdings. You're paying the right jurisdictions for payroll tax. And then finally, you got to make sure you're at least segmenting your financial information in a way that will allow you to file and pay your taxes on an annual basis. Which is why because of that last piece, that's why when new business owners or new agency owners come to us and they ask us, like, I'm thinking about starting this agency, what's the first thing I should do? Our advice is often open up a new bank account, right? Open up a new bank account. It can be a checking account. Get a debit card. And from that point forward, anything that sort of looks or smells like your business, it should exclusively be running through that new bank account. And even if you don't do anything with it, you don't run spreadsheets or put it into QuickBooks or anything like that, at least when the time comes for somebody to come through and actually file your taxes or to use that information in the future, it's all segmented. It's all easy. The only thing that's difficult is trying to separate personal expenses from business expenses when they're all sitting in the same account. So that's always our first piece of advice. The next thing would then just be, okay, so every stage has its one thing. Like, what's the one thing for create mode? Well, what I would tell you is, in create mode, devoting a lot of time to complicated budgeting and forecasting exercises is probably a waste of time, right? The business is simpler than that. And I would say that the idea of forecasting, which is, when I say forecasting, I mean I'm going to create a prediction of what I think my future profit and loss or income statement is going to look. I think the idea of creating a forecast before you have a predictable or repeatable revenue engine, I think that's a fool's errand. I think that's a complete waste of time. So what I would recommend you do, if I'm saying, well, you don't waste your time on a complicated budgeting exercise, and certainly not on a forecasting exercise, what I am advising that you do is have an idea of what you need to do to avoid running out of money, right? Because that's your whole goal. Get to $1 million without running out of money. So what I would tell you is, first, ask yourself, what are my fixed monthly operating expenses, right? For some agencies under $1 million, like agencies that are just starting out, that number might actually be zero. You might be the only quote unquote cost, and you don't need to take a salary because you can afford not to for some period of time. So your fixed monthly operating expense is $0. For agencies that are further into that 0 to 1 million range, it's certainly going to be north of that, right? You have staff, you might have a brick and mortar office, you might have any number of things. So figure out what that number is. Let's say it's $30,000 and $30,000 in monthly expense. Okay. Then you need to figure out what is the amount of AGI that you need to generate in order to, at minimum, break even and not run out of money. Okay. AGI. I just threw out a term, and many of you may not have been familiar with that. AGI stands for agency gross income. Okay. Some people call it net revenue. We call it AGI, agency gross income. What is agency gross income? Well, agency gross income is basically gross revenue. We all know what that means. I charge my client $50,000 minus specific out-of-pocket costs required to deliver that. So if you're a media agency, for instance, and you sold a $50,000 campaign, but of that $50,000, $30,000 is actually going to Facebook and Instagram, and the other $20,000 is actually what you get to keep. Your AGI is 50 minus 30 equals 20, right? Same idea if you sold a $50,000 website project and you're doing the design, but you have to farm out the development, and that development is going to cost $15,000. Okay. And you know that up front, and that $15,000 is a freelancer. Well, then your gross revenue is 50, but your AGI is 35,000. That's what you actually get to keep. That's really yours. And that's what you get to keep to cover your monthly fixed operating expenses. And so the bottom line is, as long as your monthly AGI, or, in a project business with a lot of highs and lows, maybe look at quarterly, as long as your quarterly AGI, again, the amount you sell minus the fixed out, the out-of-pocket costs, revenue to you, as long as that exceeds your fixed monthly operating expenses, then you will stay in business. Are you going to generate an enormous profit? Maybe not. You're going to generate a perfect gross margin? Maybe not. Again, counterintuitively, I would tell you, while those are metrics that start to get more important as you approach that first inflection point, those are not necessary for you to get out of this stage. The only thing necessary for you to get out of this stage is sales and service. Heavy emphasis on sales, but sales and service. And that, my friends, is create mode. See you next time.